This is stock sectors. We're going to look at the Mag 7 plus SMH. I think this is important because there are some warnings here on these stocks, and that of course would be warnings for the S&P 500 and the NASDAQ. Now, this may not mean that there is a major stock market top already in place because we see a very big rotation going on. What it does mean is that the S&P 500 and NASDAQ will have periods going forward where they underperform, and the market may be led by not these growth stocks, but more in the value or low caps or mid cap stocks. And we've seen that going on, but I wanted to show you this because these stocks, many of them, really look like they are done for as far as these giant crazy moves they've had on the upside. So let's take a look at these stocks, and I think you're going to see what I mean. Some of them are still okay, and I'll show you those. All right, so we're going to start out by looking at Apple. Now, we have weekly on the left, daily on the right. Of course, we're doing multiple time frame cycle analysis, and we're looking at support, resistances. There are some important breakdowns on some of these stocks. Apple doesn't really have that. What Apple has right now is just simply warnings right over here regarding this big engulfing pattern on the weekly that comes at the top of that fib extension. Well, that is a warning that the top is in place in Apple. And you can see in here this formation where there was this island top right there, those two bars that a gap up and a gap down. And that is another warning of a top in Apple. Now, we have this projected down, either getting down to the supports here around this is 222, this is 218, and that would be in the next week and a half or 2 weeks, or potentially getting down to this cycle low support right over here, which is 206. This would be really bad if that happens. This is one of the more positive of the stocks in this group because, well, you could see in here the momentum is still positive. When you look at this, is still green, and you can see that the slim ribbon right over here is still pointing upwards, and this can be support for Apple. So Apple is going to be one of the more less negative stocks in this category that I think you're going to see here. So let's go through these really quickly. I'm going to keep this weekly and daily up as a side-by-side, and you can see on the bottom is the cycle brackets in both of them, giving you an idea of the cycle rhythms, the money flows in the market, and then the slim ribbon PO on the bottom, the slim ribbon right over here, and the reversal scout that you can see right here. Reversal scout turned positive right over here in Apple, which was a fantastic signal. This rising phase was giant on the upside as it moved from 165 up to 237. So that was all positive, and the Apple is looking less negative than most of what I'm going to show you in here. Microsoft, the next one. This is a different picture in here, and I'll show you why the picture is different. That's because you have the breakdown over here on the daily cycle. So you can see the cycles in here and the rhythms in there, and this where that cycle low was, very bullish formations that you had right here, but then the bullish formations ended. And what that means is that when it breaks this cycle low support, it's got this much time still to fall in Microsoft. It's very reasonable to project it over here to 427. That's about 13 points down from where it is right now. Again, in this next week and a half to 2 weeks, we're going to be looking at the synchronicity and the timing that we have in here as these harmonics are lining up, of course, in this tech AI category. And then because this is a negative cycle, we would expect it to be followed by another negative cycle. So this cycle rebound right in here gives you a sell pending area. We don't have the anchor point yet, so we don't really have the sell zones. So that's why I listed in there, and that's why I believe that you'll get a rally in here that will fail, and that lines up with this space right over here on the weekly, and then both of them moving down again. So this is an example of one of those very important AI stocks that has a heavyweight in the indexes that is now turning negative. And very likely this formation here warns that this is an important peak on the weekly chart. Let's look at Google, G-O-O-G-L, and we'll see right over here as we look at this, you have a similar occurrence. Now you have this potential weekly flag forming in here, and you can see this intermediate low expected over here on this minor cycle right there. So the minor cycle there lines up with these cycles here. So that says that this flag likely will extend down. Support here is at 170. Support over here is around 171, 172. So that's what we would expect over this next. This looks like about 2 weeks or a little bit longer. But again, you have this breakdown here. The cycle is pointing to the downside. And it does say that if we get rallies in here, they are likely to fail. So that's a look at the third one, Google. Here's the next one, Amazon. Amazon, of course, much more in the retail category, in my opinion, than it is in the tech stocks, but it is listed in this Mag 7 category. That's, of course, because they have AWS, Amazon Web Services, which is a huge part of their business. Again, a breakdown right over here. You could see the cycle rhythms right there. Remember, these are cycle brackets. These are not an indicator. This is not anything but a guide for us to do this work in here so that we understand the rhythms or in the market. And you can see in here, this cycle bottomed here. This one, well, it's still in the middle of the cycle. This has, again, a couple of weeks to go. And then, again, because of this negative formation in here, the structure says that the next rally will come up and fail. Once we have an anchor point in here, we'll be putting in those resistance zones, and that's why we have it listed as sell pending right now. You can see in here, as it's turned over, it's gotten into support, and the support right over here is around 179, and here are 174. So if that were to happen and get down and test this low, that of course would be even more negative. But this is a negative pattern. You can see in here, upward momentum has been lost. It's now at neutral right over there. As far as the daily chart goes, this still has not turned over on Amazon and the weekly momentum. So that has some work to do to really turn negative. But the daily has turned negative. I didn't mention momentum in all of these stocks, but it's important as you do your analysis to look at that. I hope that you have the ability to use our momentum indicators because I think they are so good. So this is another important one. Here you could see this evening star formation right over there in Nvidia. Of course, this has been the darling, the market leader, split 10 for 1. Incredible. This right over here you could see is an engulfing pattern. I'm just going to grab that right there so you can see that engulfing pattern here, which made the cycle peak. But it only had a couple of days to fall, as you can see, and then got into another rally. But it could not make that peak and then turned down and broke the cycle low support. What that says to me is that this is likely an important peak in the stock in Nvidia. We're going to look at prices over here, support right there at about 108 on the weekly chart. So this actually is pointing down to a short-term extension right over here. But I'm just going to duplicate this so you get an idea that we're really going to target about 108 right over there. Let me just make this red so you get the idea of that's what it looks like coming right down over there. That's that weekly support level. We'll just grab this and put that right there so you can see that's where that weekly support is. And it's likely to get down in that area below the 110 number. Of course, it's way below where it was when it split. Again, negative shape here says that the next rally will likely fail in a resistance area, and then after that turn down again. That will all occur all right over here in this zone that we see right over there, which is that fib extension zone, where it is likely to continue to fail from. So that's a look at Nvidia. Let's take a look at Meta. Now, Meta has been the one stock that I have really believed has been just ridiculous, hugely excessive on the upside. You can see here on the weekly chart, it has this engulfing pattern. It makes this double top and then turns down over here. This was a huge decline from 542 here down to as low as 458. So that was like 15% drop or so right there. Again, you can see in here, look at these cycle rhythms, and this points to about a week and a half on the downside still. This is your cycle low support right over there from that cycle, but this one did break down. And again, you have a negatively configured cycle here, a peak set in here, and that says that once the low is made in here somewhere, we're going to guess at 454 right there, but there's another support here at 442 that you can see right there, and those are levels that I think are important. So I'm just going to grab this right over here, put in the 442 number right over there, and you can see that's kind of where it could get down to there. Bounce, give you a good selling opportunity, and then continue on the downside as you see right over here. This momentum is turning over right there, and this momentum has turned negative in Meta. I think any rally that you get here in Meta is likely to fail. It will be a fake. I think the whole concept of Meta being wholly redeveloped to give you these great AI experience, and it was going to be able to be monetized. I think that's all a big farce, and I think we're going to see Meta have a hard time, a long time looking forward. Tesla, of course, in the tech category, because they're really a tech stock, even though they make cars. This is very interesting. And you can see in here that you get this big, long-legged doji right over there, and a Harami cross is what they call that. That really says that there's a top area right in here when you look at that. But still momentum strong, very small downward turn compared to the rest of them. And look at here at the cycle patterns. Now there's an out-of-phase cycle right over here due to bottom in the next week, and then likely to turn up again. And you can see this diamond consolidation. That says to me that there's a strong likelihood that what we're going to see is a test of the high right over here before this one turns down. So let's just put this in right across here. So it probably gets back up to that 270 level in there after this diamond is finished forming. It might not, it might get down over here to 231 before it takes off on the upside. But this consolidation right over here, really, when you get these diamond shapes, it really says there's another likelihood that it's going to try for that high again. So you can see Tesla not as negative. With the news that came out regarding their deliveries, you would think it would be worse, but it's not. It's really giving a pretty good sign. You can see in here these signals over here of momentum being resumed to the upside. You're about to get another one right over there. So strong momentum still in Tesla, a bullish diamond configuration right in here, and this one still looking like it's got upside. Now we're just going to add to this and look at SMH. Because the semiconductors are so important to this analysis, we're going to take a look here at the SMH. So you can see what's going on in here. You have a evening star formation that is very likely to complete here on the weekly. And you have a breakdown here on the daily. This is very much in alignment with a 1.5 to 2 weeks still on the downside. And because of these peaks that are forming right in here, it says to me that this right over here is a peaking area, and this right over here is a negatively configured cycle right here pointing to the downside, very likely to get below that low right over there, which was 250, and probably getting down over here to 241. That is support from the weekly right over there. You can see it lines up with this low right over here at 241, and potentially getting even deeper than that out over here into Q3 to about 231. So what this says is that momentum has been lost on the upside. You could see the slim ribbon turning over, the slim ribbon PO, which was positive throughout here, now giving you this signal of it being neutral, but not yet turning over here. So we have the peaking process going on right now. We'll look for another week or week and a half of upside attempts that fail, and then over here a much better selling opportunity in SMH. That is a look of this stock sectors. I think it was very important to bring this because it gives you, number one, a great look at the analytical style that we bring, how we do multiple time frame analysis, how we bring in cycle analysis, which shows you the importance of structures, and the meaning of those structures and what it means going forward. And that's how we do our projecting, using that information to give us what we consider to be the sum of the analysis. And the sum of the analysis for most of these is negative, and that's a warning for the S&P 500 and the NASDAQ. And again, I will say it. It doesn't necessarily mean an important top yet in the stock market, because there is a potential for the rotation to continue. And then once this corrective phase is over that we anticipated, then the market getting up and testing those highs it recently made, or maybe taking them out by a little bit. So I wanted to bring you what I thought was important analysis, and I hope you thought it was great. Let us know.